Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May the 2nd, the day after the FOMC. Yesterday, the big surprise was the employment cost, benefits going higher, wages going higher, employment cost going higher. Really big surprise that made the market tank. And today, another big surprise is ISM manufacturing PMI coming from the 50 expansion territory to 49, and jobs opening are actually going lower. ISM manufacturing employment going higher, and manufacturing prices really skyrocketing. Job quits are a little bit decreasing, and overall the sentiment is quite bad due to the higher cost, the higher wages, the higher benefits. That's inflationary pressure. That coupled with the fact that the MBA mortgage rate is also increasing from 7.24 to 7.29, and employment change also, payrolls increasing from the estimate of 175 to 192, barely a decrease from the previous 208. So basically, inflationary pressure on wages, inflationary pressure on payrolls, on employment, and the Fed wants the labor market to really cool down because wages is part of the problem right now. And we are going to cover what Jerome Powell said yesterday on the FOMC statements. And basically, Jerome Powell said two important things. The first part of the conference, the press conference, was that the risk to achieve employment and inflation goals have moved toward better balance. That's an uptick. That's good for the market. The Fed was unanimously voting in favor of holding the rates at the same level. And one of the big interesting thing that Jerome Powell said is that the QT, the quantitative tightening, is going to decline. This means that the Treasury is going to cap to 25 billions per month instead of the 60 billion. So the balance sheet reduction, aggressive reduction of balance sheet that they were doing is going to slow. Slowing the pace of runoff will ensure a smooth transition for money markets. This is important because this will provide less pressure to the markets, including money markets. And also, the Fed does not expect it will be prepared to cut rates until it has gained greater confidence that inflation is moving towards 2%. So no cut rates for now. Higher for longer is still the narrative. Also, the narrative is that inflation is still too high and further progress is not assured, but they do not expect it will be prepared to cut rates until they have greater confidence. It is likely that gaining greater confidence will take longer, so higher for longer, and so far this year inflation readings have not given us that greater confidence. So they are not confident. QT is slowing. That's good for the markets. Risks are balanced, and this is the first part of the equation in which the markets really push higher at the beginning of the press conference, but then they start doing some other sentences. We believe over time the policy is sufficiently restrictive to bring inflation back. It is unlikely that the next policy move will be a hike. So no interest rate hike. The market was really scared, saying maybe it's not a cut, maybe it's a hike. So this is not longer the situation. Jerome Powell really stressed the fact that they do need to take a signal from this worse than expected inflation because they want the 2% inflation. And these readings for this year are not encouraging. They are not confident. Inflation has come down to below 3%, but the employment is what is now into focus. That's why yesterday we took that big hit, and today's numbers are not showing that the labor market is cooling down. However, for the markets, for the earnings, he doesn't see stagflation regarding growth nor inflation. And this is good for the markets, good for growth, good for the earnings, because inflation is one of the battles, but then we are now in a big earnings season and we want growth. And the fact that stagflation is not in the eyes of Fed's Powell, it's good for the markets. And lastly, if wages increase run higher than productivity, there will be inflationary pressures. Productivity is important, wages is important, but if wages are outpacing the productivity, then we have inflation. Finally, this is for UK, a message for the Europe. Other countries considering rate cuts are not experiencing the growth that the US has. So this is a message for Europe because it looks like UK is going to cut in June. It's the first time that UK, Europe in general are going to do that before US Federal Reserve is going to cut. But the fact is that US, it's been super strong. We've been growing, the consumer spending is quite strong. So that's why the Fed doesn't have confidence in the inflation progressing lower. But this is good for the economy. So we have in this balance in which we have to take into account a lot of variables, a lot of things are going on. And if we check the interest probabilities, we now see that what was on the beginning pricing in out May and June and July, we are now basically pushing from here. This was 40% to the 60% probability of no cut, and the cuts are moving towards the end of the year from September to November with 45% of probability of September rate cut. This is already priced in. This is what the markets are showing. And before moving into today's price action, we have to understand what happened yesterday. This was the first part of the conference, and the second part of the conference was really this big sell-off. This is important because during the overnight in which I was really looking towards, during the overnight, all this liquidity that was being built was basically my opportunity to take along here. But let's not cover that. Let's cover the open because that was super interesting. Look at all these channels means liquidity. It's going towards one side. In this case, we were just taking sell side liquidity, but not taking buy side liquidity. And all this was money. All this was money that at some point, and at the same time, this liquidity up here in the pre-market highs was my main target. I took the overnight long for 43 points. I was not liking the price action here, but I was watching because I didn't want to just trade the FOMC, but I was watching to see if this kind of manipulation lower was happening. And then the release and the push into the conference. And look at this move. That was insanely high, and then the big rejection lower. So nothing burger for the FOMC. But today, after digesting all the information from yesterday, today we started with a gap. And that's the first thing I want you to notice. There's a gap here that we left during the overnight open. That gap, it's a sign of bullishness, but at the same time, during the open, we want to see some kind of manipulation move towards the long side. That's the trade that I took. Because if we check the 15-minute chart after yesterday's sell-off, if we take the fifth retracement from highs to lows, there's a 50-minute bearish fair value gap on the golden pocket and the 50% retracement that we've been holding throughout all the session since the overnight. This is resistance, but sometimes we have to see what actually happened, not what didn't happen. What didn't happen for now is that we are still showing liquidity up here, resistance on the inverse fair value gap. But look at what happened at the open. Let's see the 1 minute chart into the open, just the usual lower highs, lower lows until this zone. This is excess. This is a big push, shorts getting trapped, and then the move higher. I took this pullback for high of day. So this pullback, basically with the fair value gap, let me just right here. This was my main setup today, and the target was the high of day here. When did we just took high of day for 163 points. Why? Because look at this setup. We just grabbed liquidity from yesterday, from all the people that was super happy yesterday, with all the FOMC holding into the overnight. All these people got got taken out. This liquidity is super important, and look at this excess. This excess is in the 15-minute chart, in the 30-minute chart, and in the 1-hour chart. This candle, it's super bullish after yesterday's sell-off. So be careful, because there's a lot of shorts in this market. If you're a short, be careful. If you're a long, I was quite confident that after yesterday's big volatility move, today's gaps was going to just be taken, and I was watching here. This was what I was watching. If we were to just continue lower, I'm not interested. But I just waited for the setup to appear in my eyes. Things that gave me confidence to hold through all this chop, fair value gap being respected. Let me just remove the gap. Fair value gap being respected is the first thing that I was super confident with. And that held throughout all the day. The same thing that we just, this channel towards the downside, lower lows, lower highs. During all the day, we've been putting higher highs and higher lows. And this is pretty typical after a big manipulation move or high of day. High of day was up here. This was a pretty simple trade, but at the same time, it requires a lot of confidence. And I was quite confident right now that the market, it's already taken my target. I've been saying this a couple of videos before. When the target it's already hit, I'm not interested anymore on trading. Why? Because the manipulation move, which it's already happened, and the target it's already met. What they do right now is just chop and chop and chop. The intraday traders, big smart money traders today just did what they would like to do. And this excess, it's for the long term. I expect tomorrow a move towards this fair value gap that was respected yesterday. This level of closing candles and all this zone, I don't think today we are going to test it, but tomorrow, after this week bullish candle, I think tomorrow we are going to continue higher somehow. So my target tomorrow is this fair value gap. Today it was the same, but I was just targeting high of day. We just hit it, and I'm right now doing the video. So several things that are encouraging is this kind of moves. Also, dollar is just selling off. Yields are pretty damn red from yesterday. The 2-year yield it's below 5%, and this is quite interesting because yesterday's mood from Jerome Powell was quite soft, and the 10-year yield is also showing the same weakness. We are bouncing here, but I think these two red candles are showing you a change in sentiment. The VIX is also retracing lower below 50. The Russell, that is pretty sensitive to interest rates, are really pushing higher. And today we have also Apple earnings. So Not only from yesterday, we can take several sentences, several statements from Powell that are encouraging towards the market being strong and the earnings being okay for them. Growth is there, but at the same time, inflation is not yet progressing. So we just want to see more data coming in. But right now, the markets are pretty happy at these levels. They wanted to establish some kind of base, and this thing, a lot of people were just waiting for the bear flag to continue lower, because this was a bear flag after this huge sell-off. A lot of people were waiting for this continuation lower, but Jerome Powell just changed the sentiment, and my main reason is this candle. This candle and this huge block are going to be key tomorrow, Friday. And my forecast, I already told you, I think tomorrow this 15-minute fair value gap, it's going to be retested to the high. I don't think after today's big week, big bullish candle, I don't think we are going to reject and continue lower. There's a lot of people already establishing, a lot of blocks have happened today. I've seen hundreds and hundreds and hundreds of blocks on the Nasdaq. I think this was a zone of accumulation. So I expect tomorrow to just continue during the overnight. Let's see some kind of manipulation lower and then start building again momentum into the open. This is my level. This is my sentiment and my bias for tomorrow. This zone needs to hold either today or tomorrow in the overnight. Right now we are having some kind of a pullback, but I think this is what I would like to see. Towards tomorrow, we just want to see this kind of close, and this kind of close. This zone is going to be key for the smart money to just push, and then we can then target the liquidity towards 17,800. That's my bias. If something from here is not happening either today or during the overnight tomorrow, and we start seeing weakness, I will just adapt and most probably don't trade on Friday. I'm quite bullish into tomorrow, but I will not be blindly trading this inverse fair value gap just for this. I'm bullish. There are signals that are telling me that there's some kind of accumulation and shorts are going to get squeezed after yesterday's Powell's statements. And the big catalyst might be Apple today. Apple is quite oversold on the daily. As you can see, it was quite down. Here, there's a zone of battle between all these lower highs. And today's earnings are going to set the tone for tomorrow. If Apple earnings are quite decent and we start seeing buyers, Apple will carry this kind of setup for tomorrow. And that's my plan. And that's what I would like to trade. Plan your trade your plan, manage your risk, be patient, and you will be successful on trading. It sounds easy, but it's super difficult. But that's the key to be successful. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Stay safe, everyone. There's a 15-minute fair value gap showing up right now. And after this push, we might just retest and continue higher. This I would like to see before the close and into Apple earnings. Let's see what happens. Let's plan our trades for tomorrow. You know my plan, you know my bias. If you agree, let me know in the comments down below, and let's see what happens tomorrow. See you tomorrow.